Welcome to A Listen at a Time, where we will be learning something, a listen at a time.
Welcome to the deep dive. You've probably heard the buzz around central bank digital currencies, or CBDCs.
A really hot topic globally right now.
Exactly. And today, we're zeroing in on arguably the most active player in this space, China, with its e-CNY.
That's right. We've talked about the tech side of the digital yuan before, the nuts and bolts.
Right.
But this time, our focus is squarely on its domestic rollout within China. And maybe more importantly, how it's affecting the individuals using it, day to day.
Absolutely. And to get a handle on this, we've got some really interesting material. Alongside detailed reports on the e-CNY's progress, we also have an analysis dated April 2025, looking at China's semiconductor manufacturing ambitions.
Now, hold on. You might be thinking, semiconductors, what's that got to do with digital cash?
Yeah, it seems a bit disconnected at first glance.
But if we connect this to the bigger picture for you, you'll see a critical underlying theme. China's drive for, well, technological self-reliance, securing control over essential infrastructure. So understanding their strategic mindset in areas like chips gives us some really crucial context for why they're pushing the e-CNY so hard domestically and what the implications might be.
Okay, let's unpack this then. The e-CNY. Maybe for anyone just tuning into the whole CBDC conversation, can we get a quick refresher? How is it designed to work for people inside China?
Sure. So at its core, the e-CNY is simply a digital version of the existing renminbi. The key thing, it's issued and totally controlled by the People's Bank of China, the PBOC.
The central bank itself.
Exactly. Which makes it fundamentally different from, say, decentralized cryptocurrencies like Bitcoin. There's a central authority. And it's also different from those big private digital payment platforms everyone uses in China.
So official digital government cash, not crypto, not Alipay. Got it. Now, one term that keeps popping up is controlled anonymity. What does that actually mean if you're using e-CNY to, buy your groceries?
Well, it's fascinating, isn't it? The PBOC is trying this balancing act. They've designed a system that offers, and this is their phrase, anonymity for small value and traceable for high value transactions.
How does that work in practice?
It's done through tiered digital wallets. You can open a very basic wallet, tier 4, I think, with just a phone number. That gives you some privacy for smaller, everyday purchases. Limited transaction amounts, though.
Okay, like loose change digitally.
Sort of. But for larger transactions, you'd need a higher tier wallet, tier 2 or 1 maybe, and those require much more identification, your national ID, bank account links, that kind of thing.
Which makes those transactions traceable back to you.
Precisely. So your morning coffee might be, well, relatively anonymous from the platform's view, but a bigger purchase. That would likely be linked directly to your identity, at least as far as the PBOC is concerned.
Right, makes sense from a regulatory angle trying to clamp down on illicit stuff, money laundering. Now, China already has these huge, dominant digital payment methods, Alipay and WeChat Pay. How is the e-CNY actually different for the average user? Why introduce it?
That's a really good question, and it gets to the PBOC's strategy. First off, think about liability. With e-CNY, it's a direct liability of the central bank itself.
Like physical cash, but digital.
Exactly. With Alipay and WeChat Pay, your money is essentially held as a claim on commercial bank deposits. So the underlying risk profile is different, theoretically safer with the e-CNY.
Okay.
Well,
Second, interoperability. This is a big one. The PBOC seems to want the e-CNY to break down the walled gardens created by Alipay and WeChat Pay.
meaning you could pay someone using WeChat Pay from your e-CNY wallet, perhaps.
That's the goal, eventually. Seamless payments across different platforms without being locked into one company's ecosystem. And for you, the user, that's convenient.
Yeah.
But strategically.
Strategically for the PBOC. Yeah, it's potentially a way for them to regain some influence over the digital payments landscape, which is currently dominated by these private tech giants. Gives them more leverage, more insight into financial flows.
Interesting. So it's not just about a new form of money. It's about reshaping the digital payment market itself.
Precisely. Then there's privacy, a complex one. While Alipay and WeChat Pay collect vast amounts of your data for commercial use, targeted ads.
We've all seen those.
Right. The e-CNY claims to offer platform anonymity for small transactions via things like subwallets, while still allowing state traceability, as we discussed. It's anonymity from the platforms, not necessarily the government.
A crucial distinction.
And there's the offline payment feature. The e-CNY is designed to support dual offline payments transactions, even when neither the payer nor pay has internet. That's something the others don't really offer.
Useful in areas with spotty connections or emergencies.
Could be. Finally, the e-CNY is non-interest bearing, unlike funds in Alipay or WeChat Pay that might be linked to money market funds earning a tiny yield.
So it's purely for spending, not saving.
That seems to be the design, yes. Overall, the PBOC's aims look like boosting payment system resilience, having a backup to the private giants, and fostering more competition.
Okay, so we get the design philosophy, but how's it actually being rolled out across China? Are people, taking it up?
The rollout is definitely progressing. It's happening through these ongoing pilot programs in, well, dozens of cities now.
Expanding pilots, okay.
And we're seeing a growing number of merchants accepting e-CNY, local shops, bigger chains, online platforms. It's becoming more visible.
Any numbers on usage?
Yeah, the volume of digital RMB transactions reportedly saw a huge jump in 2023. I think the figure was something like 630% growth year on year.
Wow, 630%? That's significant.
It is. And here's a striking statistic for you from our sources. Apparently, around 1 in 8 people in China already has an e-CNY wallet set up.
1 in 8. That's pretty rapid adoption, considering it's still technically in pilot phase in many ways. Are there specific examples of how people are using it day to day that stand out?
Absolutely. The pilots involve not just state-owned banks, which you'd expect, but also, interestingly, some foreign banks are getting involved on the business side.
Oh, really? Like who?
Standard Chartered, for instance, was highlighted as the first foreign bank to join the business pilot program. BNP Paribas is also mentioned. This suggests, a deeper integration into the existing financial system is happening.
So it's not just a consumer thing.
No, it's business to business as well. And for individuals, we're seeing it used for a whole range of things, paying for public transport, utility bills, groceries, online shopping, even distributing government salaries or subsidies in some pilot areas.
Okay, so it's definitely moving beyond just being a niche experiment. Now, let's shift to the impact on individuals. One potential upside often mentioned with CBDCs is financial inclusion. How might the e-CNY be helping, say, the unbanked population in China?
That's a really important angle, yeah. The e-CNY could potentially broaden access to digital payments for people without traditional bank accounts. Well, features like those basic Tier 4 wallets needing only a phone number and the offline payment capability, these could theoretically bring more people into the digital economy, especially in rural or underserved areas.
Makes sense? Are there catches?
Well, yeah. Having the option doesn't automatically solve everything. You still need access to affordable smartphones, which isn't universal. And digital literacy people need to know how to use it safely and effectively. Those barriers remain.
Right. Technology access and know-how are still key. Now, flipping that coin, China already has incredibly high digital payment usage. Is the e-CNY likely to just kill off physical cash entirely?
The potential for e-CNY to accelerate the decline of cash is definitely there, even though the PBOC officially states they want cash and e-CNY to coexist for the long term.
But in reality,
As digital options become even more convenient and ubiquitous, cash use will likely continue to fall. And that raises concerns for certain groups, maybe older people, those less tech-savvy, or those in very remote areas who still rely heavily on cash.
they could get left behind.
Potentially, yes. And there's the other aspect, the loss of anonymity. Cash offers fully anonymous transactions. e-CNY, even the anonymous small value tier, isn't anonymous to the central bank. That inherent traceability changes the game for financial privacy.
A fundamental shift. Now, you mentioned it's non-interest bearing. How does that affect behavior? Is it just for spending, not saving?
Largely, yes. Because it doesn't earn interest, there's little incentive to hold large balances in your e-CNY wallet. It's primarily designed as a medium of exchange for transactions.
But people will likely keep their savings elsewhere, in banks.
That seems to be the intention, yes. This design avoids the e-CNY directly competing with commercial bank deposits for savings, which could disrupt the banking system. It's different from how some other countries are thinking about potential interest-bearing CBDCs.
Okay, let's talk trust. For any currency, digital or not, people need to trust the issuer and the system. How critical is public trust for e-CNY adoption?
Oh, it's absolutely fundamental, crucial. For people to willingly use e-CNY, especially beyond small amounts, they need to trust the PBOC. They need to trust the government's handling of their transaction data.
And if that trust wavers?
Any significant data breaches, perceived misuse of data, or privacy concerns could seriously undermine adoption, especially voluntary adoption. Trust is paramount.
This brings us to a pretty complex and sometimes controversial area: programmability. The e-CNY has programmable features, right? What does that actually mean, and what are the potential downsides?
Yes, programmability is a key feature being explored. It basically means embedding conditions like smart contracts into the digital currency itself, or perhaps more accurately, into the payment process.
So you could set rules for how money is spent.
Potentially. It could enable useful things, like automatically dispersing government subsidies that can only be spent on specific goods, say food or medicine, by a certain date. Targeted policy delivery.
Sounds efficient, maybe.
It could be. But it also raises, well, significant concerns. The ability to program how and when money can be spent could, theoretically, be used for social control.
Like restricting spending for certain individuals or on certain items the state disapproves of.
That's the fear some people have. Even if the initial intent is benign, like targeted welfare, the capability itself exists. It's important here to maybe distinguish between programmable payments, like setting up automated bill pay, which is common in programmable money, where rules are embedded in the currency itself.
And e-CNY leans towards the latter, potentially.
The PBOC has talked about exploring smart contracts, which implies programmability beyond just automating payments. It's this idea of money itself having embedded rules that raises deeper questions about financial autonomy and individual freedom.
Right, the idea that your digital cash could come with strings attached,
Yeah.
that definitely makes people uneasy. And this ties into the broader issue of financial surveillance, doesn't it?
Absolutely.
How might widespread use of a traceable e-CNY impact financial privacy in the long run?
Well, the potential for it to sort of normalize government monitoring of financial transactions is a really significant consideration.
Normalize it how?
As more and more daily spending moves onto a digital platform where the state inherently has oversight capacity, the traditional expectation of financial privacy, especially the kind cash afforded, could gradually erode. People might just get used to it.
And the long-term implications.
It shifts the balance, potentially. Greater state insight into individual economic activity has implications for economic freedom, dissent, and just the general relationship between the citizen and the state. It's a profound change.
Okay, let's circle back to where we started, that connection with the semiconductor industry report. How does this whole e-CNY initiative really fit into China's wider technological strategy?
If you look at the big picture for China, the e-CNY drive aligns very closely with their broader push for technological self-reliance and sovereignty. Think initiatives like Made in China 2025.
So controlling the tech that matters.
Exactly. Having control over fundamental infrastructure, whether it's chip manufacturing or the rails of the financial system, is seen as a strategic imperative.
Reducing dependence on foreign tech or foreign financial systems.
Both. Just as they want to reduce reliance on foreign semiconductor technology, gaining greater state control over the domestic financial infrastructure via the e-CNY is a key objective. It enhances their resilience and autonomy.
So it's way more than just updating payments. It's about strategic national power in the digital age.
That seems to be a major driver, yes. And you really see a contrast here with how other major economies are approaching CBDCs.
Like the US or Europe.
Yeah, the US, the Eurozone, the UK, Japan, their explorations tend to be much more cautious. There's often a greater public debate, more explicit focus on user privacy safeguards, and slower development timelines.
Whereas China's approach is.
Much more rapid, state-driven, top-down implementation. It reflects China's specific national priorities and governance model, which clearly differ from those in many Western democracies.
Okay, so as we kind of wrap up this deep dive into China's digital cash revolution and what it means for people there, what are the key takeaways we should leave our listeners with?
I think the main thing is that the e-CNY's domestic rollout is moving fast. It offers potential benefits, efficiency, maybe inclusion, but comes with really significant trade-offs.
Trade-off centering on privacy and state oversight.
Exactly. That controlled anonymity framework is the PBC's attempt at balance, but the inherent traceability combined with the potential for programmability. Well, they raise fundamental questions about financial freedom.
It really feels like the e-CNY isn't just a CBDC model, but China's model, deeply reflecting their national goals and approach to technology.
Absolutely. It's tailor-made for their context. And looking at the e-CNY closely gives us a preview of the debates all societies will face as digital currencies become more common.
Which leads us to a final thought, maybe.
Yeah, a final thought for you, the listener. As digital currencies inevitably become more prevalent globally, how will your society strike that balance? The balance between the undeniable benefits of efficiency and accessibility and the fundamental rights of financial privacy and individual economic freedom.
That's the big question, isn't it? Definitely something worth thinking more about.
Indeed. It's a conversation that's only just beginning.